The latest Bitcoin miner death spiral FUD just dropped, and it's coming to us by way of a company most of us have never heard of called Cipher Mining. And apparently, AI is responsible for this. Let's dive into it. Welcome back, everyone. Before we dive into the latest round of FUD, just a quick follow-up on the clip that we did last week about Giacomo Zucco having issues with Volley Wallet. And it turns out, look at that, Giacomo's social media campaign worked very well. And miraculously, Volley was able to credit his account without the additional KYC requirements. Who would have thought? On to the main story. So, just heard of this publicly traded company. Cipher Mining considers sale as Bitcoin competition intensifies. And that's right, the FUDsters will always have you believe, especially the shitcoiners. The shitcoiners love the miner death spiral FUD. It allows them to create a whole bunch of false narratives like the Bitcoin security budget boogeyman. Ooh, so scary. Bitcoin security budget. What is it? Who controls it? How is it predictable? What are we going to do? Anyways, it's all just absolute nonsense. But let's dive into this story because I do think it's pretty interesting, and I don't know how much validity there is to it, though. Not going to lie. So let's dive into it. So, driven by the burgeoning demand of data centers amid the AI industry's rapid expansion, Bitcoin miners have faced revenue challenges since the April halving event. Now, the halving event has nothing to do with AI or anything like that. The reality, and this is funny because I explained this yesterday, okay? So every 210,000 blocks, the reward gets cut in half. So in the previous epoch, okay, the Bitcoin reward was 6.25 BTC approximately every 10 minutes, okay? And then ever since the new epoch started, we are now in epoch 5, well, now it's down to 3.125, okay? So essentially the idea is that if the Bitcoin fiat exchange does not, right, if the price does not go up enough, right, essentially to cover the loss of those extra 3.125 BTC, well, technically miners may start to struggle, right? It's easy to imagine that, well, now they're making less money per block, okay? And this is the concern, and I've seen this. I mean, look, this is my third Bitcoin epoch, okay? I guess we'll call it that because cycle is just a terrible thing to call it. So shout out to TC and Ant for always listing the epochs. But anyways, essentially, having been around that many epochs, I can tell you the miner death spiral FUD comes around every time. The security budget nonsense comes around every single time, okay? There isn't less hash rate because of AI data centers, okay? That's not what it is. Anyways, let's continue. This financial strain has prompted many in the sector to consider strategic options. JP Morgan analysts highlighted the trend of AI firms and hyperscalers exploring alternatives like leasing power or acquiring data center capacity from Bitcoin miners, given the constraints in immediate power access. Core Scientific, a North American Bitcoin miner, recently secured long-term contracts with CoreWeave, an AI hyperscaler, while CleanSpark acquired Grid infrastructure for $155 million. Okay, so CleanSpark is a Bitcoin miner, and all they did was acquire another Bitcoin miner. It's not AI. So, anyways, I don't get it. And of course, right, consolidation in a growing industry, this is completely normal. This is not abnormal, right? Like we're not like all of a sudden seeing some strange behavior. That's what happens. So I know it's going to sound crazy, but hear me out. The companies that have healthier, stronger balance sheets that can borrow debt at a cheaper rate are going to be able to purchase the companies that essentially have debt at a higher rate that are not able to command the same type of market. I guess we'll just call it market strength or market capability. I mean, this is only logic. The big guys eat the small guys. It's so funny how they try to make it sound so bad. But this is the piece right here that I think is what really matters. Kerrisdale Capital expressed skepticism about the sustained competitiveness of the US-listed Bitcoin miners, given the sector's high commoditization and growing international competition. Now, you may be wondering, Kerrisdale, that sounds familiar. Indeed, it does. Because the people may remember last month, Riot Platforms falls after the Bitcoin miner is targeted by short seller Kerrisdale. That's right. So Kerrisdale is not only shorting Bitcoin miners, but they also are shorting MicroStrategy. So when you look at this picture and you think to yourself, who is it that stands to benefit from me believing this nonsense? Well, it could be argued that it's these companies that are shorting these stocks and this market. As you guys may know, Portland Hoddle is a friend to the show. We've had him come on the show to explain various different topics relating to mining and mining firmware and hash rates and all kinds of fun stuff like that. So I posed him the question, is AI somehow causing or is somehow a major contributing factor to this hash rate capitulation? And again, I use the word capitulation very loosely. And this is what he came back with. He goes, it's not an area I know a whole lot on, but the main issue right now is that on a per watt basis, AI is more profitable. As such, some miners are switching to offering their locations to AI providers, though many sites that can house Bitcoin miners are not at all compatible with AI workloads. So, how much merit is there to AI eating into, eating into Bitcoin's hash rate? I'd say very little. Is it something that you should actually, or that we should actually be concerned about? I am not. I am really not concerned in the least. At this moment, and something that we've seen as well is that AI has a lot of noise around it, but very little actual return on investment. Now, of course, we're not talking about people who buy shares of companies like NVIDIA and, the shares pumped like 300% and then you sell them. I'm talking about the companies that are genuinely investing in these other companies, these AI branded companies that are supposedly going to create products and services around AI. All of this right now is pure speculation. But you see, the proof of work that is going into Bitcoin is measurable, is not speculation, and has 15 years of history. So I don't think I think this AI thing is just it's a giant nothing burger in terms of Bitcoin. But as you guys saw, the comment from Portland Hoddle, there is some truth to it, but I'm pretty sure that it's a lot more noise than it is actual signal. Anyways, guys, that's all I wanted to talk about today. I'll catch you next week.